Real estate isn't just about buying a home. It's one of the most powerful ways to build generational wealth. Properties can grow in value, generate steady income, and pass on financial security to future generations. Unlike cash that loses value or investments that can crash overnight, real estate has a proven track record of long-term growth. Understanding the real numbers shows how smart property moves today can secure wealth for decades to come. Today, we will talk about how real estate creates generational wealth. Real numbers explained. So, before we start, make sure to hit the like button and subscribe to my channel. 1. Real estate as a wealth-building tool. Real estate has long been one of the most reliable ways to build and preserve wealth across generations. Unlike cash, which loses value to inflation, or stocks, which can be volatile, property provides tangible assets that appreciate over time. Real estate generates income through rent, which can cover mortgage payments, taxes, and maintenance, while still creating positive cash flow. Wealthy families often acquire multiple properties over time, using the income to reinvest in additional assets, creating a compounding effect. Real estate also provides leverage opportunities. Borrowed money can be used to acquire appreciating assets, amplifying returns. Unlike other investments, property has a physical value and utility, which ensures long-term stability. By strategically acquiring properties and managing them effectively, ordinary investors can build wealth that extends far beyond their lifetime, establishing a legacy for future generations. 2. The power of appreciation over time. One of the key drivers of generational wealth in real estate is property appreciation. Historically, real estate values tend to rise over decades, often outpacing inflation. For example, a $200,000 home purchased 20 years ago in a growing metropolitan area could be worth $500,000 or more today. This increase represents substantial wealth accumulation without selling the property. Wealthy families leverage this effect by holding properties long-term, allowing appreciation to multiply their net worth. Even modest annual growth rates compound significantly over time, turning single-family homes or commercial properties into multi-million-dollar portfolios. Ordinary individuals often sell too early or avoid investing in real estate entirely, missing out on long-term appreciation. Understanding and capitalizing on the compounding power of property values is essential for turning real estate investments into generational wealth. 3. Cash flow and passive income. Beyond appreciation, real estate generates consistent cash flow through rental income. This passive income can cover expenses such as mortgages, taxes, insurance, and maintenance, leaving additional profits for reinvestment. For instance, a rental property purchased for $250,000 may generate $2,000 monthly in rent. After expenses, this could leave $800 to $1,000 per month, which can be reinvested in additional properties. Wealthy investors use this principle to scale portfolios, acquiring more properties over time and creating compounding income streams. Cash flow also provides financial security during economic downturns, offering consistent income even when other investments fluctuate. Ordinary investors often overlook the importance of cash flow, focusing solely on property appreciation. Real estate combines long-term value growth with short-term income generation, a dual advantage that builds wealth steadily and sustainably across generations. 4. Leverage and financing advantages. One of the most powerful tools in real estate is leverage. Unlike other investments, property allows buyers to use borrowed money to acquire valuable assets. For example, putting 20% down on a $300,000 property means only $60,000 of personal capital is invested, yet the entire property appreciates over time. As rent covers mortgage payments, investors effectively control a larger asset with minimal upfront cash. Wealthy families use leverage strategically to scale holdings, amplifying returns while maintaining liquidity. Ordinary investors often fear debt or avoid mortgages, limiting their ability to grow wealth through property. When used wisely, leverage not only increases net worth, but also accelerates generational wealth creation, enabling families to pass on valuable assets that continue generating income and appreciation for decades. 5. Tax advantages of real estate. Real estate offers significant tax benefits that protect and grow wealth over generations. Investors can deduct mortgage interest, property taxes, depreciation, and certain expenses from taxable income, reducing overall liability. Long-term capital gains taxes are often lower than ordinary income tax rates, which benefits those who hold properties for decades. Wealthy families also use strategies like 1031 exchanges to defer taxes while reinvesting profits into new properties. Ordinary investors often fail to understand or utilize these strategies, paying more taxes than necessary and slowing wealth accumulation. Tax advantages amplify the effectiveness of real estate as a generational wealth-building tool, allowing families to preserve more of their income and reinvest in additional properties. 6. Building equity and reducing debt over time. As mortgages are paid down, equity in real estate grows, creating ownership of increasingly valuable assets. Equity represents real wealth that can be leveraged for additional investments, business ventures, or education. For example, paying off a $200,000 mortgage over 20 to 30 years transforms a liability into a fully owned, appreciating asset. Wealthy families use this equity to expand portfolios or provide financial stability to future generations. Ordinary individuals often rent or fail to pay down debt efficiently, missing opportunities to accumulate tangible assets. Real estate converts borrowed funds into long-term equity, which compounds over time, creating a secure financial foundation that benefits heirs and future generations. 7. Diversification through real estate types. Generational wealth in real estate is often strengthened through diversification. Wealthy investors spread holdings across residential, commercial, industrial, and vacation properties, reducing risk while maximizing returns. Geographic diversification also protects against local market fluctuations. Ordinary investors often focus on a single property type or location, exposing themselves to higher risk. By combining multiple asset types, wealthy families create robust portfolios that generate income and appreciate steadily. Diversification ensures that generational wealth is resilient, able to weather economic downturns and market volatility while providing consistent returns for decades. 8. Real numbers, a practical example. To illustrate, consider a family that buys a $300,000 property with a 20% down payment and rents it for $2,200 per month. After mortgage, taxes, and maintenance, they pocket $900 per month in cash flow. Over 30 years, the property appreciates at 4% annually, increasing to roughly $970,000. The cumulative cash flow adds over $324,000, and the mortgage is fully paid off, creating equity of nearly $1.3 million. By repeating this process with additional properties using leverage and reinvested cash flow, families can grow portfolios exceeding $5 to $10 million over decades. This example shows how real numbers, not just theory, turn real estate into generational wealth, creating assets that can support multiple generations. 9. Wealth transfer across generations. Real estate is uniquely suited for passing wealth to heirs. Properties can be inherited, providing both income and long-term appreciation for children and grandchildren. Unlike cash, which can be spent quickly, real estate maintains tangible value and income potential. Trusts, LLCs, and estate planning strategies allow families to minimize taxes and ensure smooth wealth transfer. Wealthy families intentionally structure holdings to maximize longevity of wealth, ensuring that each generation benefits from accumulated assets. Ordinary individuals often overlook these planning strategies, resulting in lost opportunities and potential asset depletion. Generational planning in real estate ensures that wealth continues to grow, creating financial stability for decades. If you like this video and would like to see more like it, please give it the thumbs up, leave a comment, and click the button to subscribe.